Hi everyone, and welcome along to your trading experts for today, the 16th of October 2020. My name is Paul Botterill, and it's my pleasure to be with you guys. Great to see so many of you guys in the show at this point, and I do thank you very much for coming along. Let me see if I can get Zoom to share some screen for me at the moment. It does, and there we go. Look, I thought we might just have a bit of a look around the market. If you have any questions, put them in the questions box, and I will pass them through to me, and I will answer them. We've been doing a market update each day, which can be found on the YouTube channel or via the few Facebook pages. I'm expecting Ainslie to be joining me in a few minutes, and she'll be talking about trading plans today. And I want to talk a little bit at the start of the show about what we're trying to do in the show at the moment is really focus on the basic tools of trading. And the truth is that if you get the tools right, if you get the market analysis with analysis, the psychology with Ash from the week before, if you get the trading plan with Ainslie, if you get that stuff right, if you can understand how to do some back testing, how to do some forward testing, if you can get these skills and you can develop these skills, you'll be able to take any strategy and trade it better than somebody who doesn't have that particular ability. So we've been doing a lot of work on trading skills. My understanding is at this stage is to have next week we'll have Ray Gilmore turn up and talk to us about seasonality, how to use seasonality to find great trades. He's in on Sunday as well with the mentorship students. If you're a mentorship student, don't miss that. You're going to get 2 hours with Ray on the new webpage we've got, displaying COT and seasonal data and how to get access to that kind of stuff for you guys. That'll be discussed Sunday, but next Thursday. Ray's in talking about seasonality and starting to prepare us for the one-day event he'll be doing on the 21st of November with a number of speakers coming in and talking about different things. Again, seasonality is one of those tools that if you know how to use COT, if you know how to use seasonality, these are the tools that make a difference for traders. If you know how to use fundamental analysis, these are the tools that make a difference for us. And these are what we're trying to bring you in the show over the coming weeks and months. Are the different things that can make you a little bit of a better trader. These are the tools that work across all strategies and just make good traders. Understanding price action is another one. And if you have anything you'd like us to cover in this session, we will have someone come in particularly and do that topic for you guys over the coming months. Let me know. Just post it into YouTube or Facebook, and we will be ready to go for you guys. I know Angel's in the room, might have a bit of a quick run through the market before we hand over to her. I don't have a trading topic to do today as such, so quite happy just to have a bit of a market scan. I'll just get these pictures for now just off my chart. So we'll do a quick run through the market. I think I've got Ainslie coming in, so let me just check if she's with us. Yes, I think she's in now. I'll just quick run through the market, and then we'll hand over to Ainslie to talk about trade plans. And again, Ainslie will be doing a presentation on creating great trade plans, about what to do, particularly how you can use these tools at times of loss and also of success. Trade plans are one of those things that keep you consistent when results are a little bit worse than normal or results are a little bit better than normal. Either one, they'll give you something really concrete to have a look at. I'm going to do a quick run through the market before we get into this kind of stuff. And I'm going to start off with Bitcoin. A nice push up on the gap Monday morning for Bitcoin. And now for mine, this bar runs the market. And as long as we're inside the range of this bar, for mine, we'll be consolidating. A break below here would get me short, perhaps down to test the top of this triangle. And a break and close above this level would get me starting to look up towards the 12,038 level that comes in around here. NASDAQ, we've spoken a little bit about the NASDAQ. Lovely technical pattern this, where we get the double bottom, the higher high, the higher low. Bit of consolidation here before she goes, but then she just takes off. And again, it does look to me as if on a lot of these, this bar here is a dominant bar. And as long as we're inside it, we can consider ourselves to be ranging. I did talk on where are we on Tuesday morning about the fact that I could see this bar filling into the bottom of this bar. It's a pad nicely quite a lot, and it looks like it's going to do that. For mine, what it will do though is put in a higher low, and then we will test these highs. They seem an obvious target right now and a place we're likely to go. S&P 500, big day for us on that this coming Monday. It'll be the third Monday of the month, and a lot of our guys will be getting into that. Similar type pattern, really. We do have this little quite tight flaggy looking thing going on here, but again, I am expecting to see, as we talked about this morning, a test of this level and then this bottom line, and then again run back up to these recent highs is what I would expect at this point. This level quite important. You can see it's had a little bit of work. I would like to see a touch on that and then a bounce to be confirmed long for me. Gold, well, Ainslie's our gold trade and she's in the room. We have had this top of this triangle at this stage just holding. It's been broken, retested, and it's just holding above. And as long as it holds above, I'll be a little bit bullish on gold. Quite a busy chart, and really in the big picture, what we are seeing is we're seeing gold largely range between this 100-day moving average and this monthly weekly pivot here, which are confluenced together. And really, while it's in this range, I don't think it's going anywhere in particular. While I'm a little bit bullish above the line, I need to be a little bit more bullish above weekly and monthly pivot before I'm particularly convinced in direction on it. Dollar yen continues to sit in a recent range for mine. And look, a little bit of a breakdown below here would get quite interesting on dollar yen. But for now, just bouncing off here and potentially already the top of the range comes into the picture. I've been talking for a while about this gap and how the market, for mine, quite weirdly is respecting it still. We have seen this gap closed and, test at the bottom, break out and go back up to the next level. And it's just come down, bottom, top, little pullback off the top again here. And again, I'd be looking to trade this quite happily towards the bottom. A breakout above would bring 43.73 into play for me, but really I'm looking for a run down around this 37.13 level as a target on oil. Euro dollar, well, euro hard to trade at the moment. The Brexit stuff going on, you've got to be careful of euro and pound. But for mine, still in the range. And again, 4-hour close below the level here would start and interest me. But really, what I need to do is see these lows taken out. Technically, I do have this move down to a lower high, a lower low. You can call that a lower high, and we could say we're pushing towards lower lows, but I'd need to see at least a 4-hour chart and probably a daily chart close below here before I got particularly interested. And even then, I'd really rather see it put in the lower low, pull back and give me a lower high off this level here, and then go. And we'll have to wait for that move for me personally. Got asked to have a look at Aussie yen today. Did say that the break of this level would be decisive. We do have a break here. The Aussie didn't appear to like the Reserve Bank governor comments this morning. The unemployment news seems to be nothing sensational to me. You wouldn't expect it to create this kind of move. So it does appear to be something in those comments. Look, for mine, it's a market that's still taking shape a little bit. We are heading into some pretty big stuff. This Brexit stuff seems to be going down to the wire. The US election, the truth is it doesn't look like it's going down the wire, but it's really hard to write Donald Trump off after last time. So I think the market is in watch and see mode, and maybe for the next couple of weeks we may need to be a little bit careful. So that's a quick market overview. I'm joined in the session by Ainslie. I imagine she's got some powers. I'll just bring it back. I can see her. Let me get here and make sure she can talk. Let me jump into that. And I see you guys are all in the room. Ainslie, you are muted. Can you unmute?
Well, I'm just in the middle of trying. Can you hear me okay?
Yeah, I can hear you fine, yeah.
Okay, good. I'm just getting, I've just got a backup computer just in case this one crashes. I haven't had a lot of fun with my computer, as you know, over the last couple of weeks after the move, and then finding about a kilo of dust in the back of my PC. But you get that. So, yes, I heard a comment on gold earlier before. It's driving me nuts, but yeah, it's been an interesting week.
Look, let's hear from the people listening. It's a little bit crackly coming through. Can you guys hear Ainslie okay? Look, Ainslie, it's always been an interesting week. Gold is certainly finding some challenges for us. I suspect that I'm long and you're short on gold at the moment, so we'll see how it plays out as the week goes on. Hey, Ainslie, our topic today is trade plan. I appear to be echoing through this microphone now.
Yeah. Am I coming through crackly? Because I can swap over. Give me two ticks and I can swap over my laptop.
Okay, swap over your laptop and I will continue to talk while we do that, guys. We will have Ainslie back. Look, our topic today, as I said, is trade planning. And as I said at the top of the show, I think for me, one of the most important things for traders to understand is the difference. Everyone wants a new strategy and everyone wants to hear it's amazing and everyone wants all this stuff. And it's not how traders make money. Look, the best trader will trade a bad strategy well and the worst trader will trade a great strategy poorly. And that's just the truth. And these are the skills that make traders. And we're pushing really hard throughout the organization, be it on YouTube and Facebook or the private stuff we do with our clients. Right now, we're trying to bring real attention to these skills that make up successful traders. And trade planning, as we talked about technical analysis, we talked about psychology, we talked about back testing. These are the things that make great traders. That ability to understand what to do when things stop working, and that ability to stay calm when things are working really well. These are things that make a big difference to traders, and it really is our emphasis all the way through. Yep. Look, Joe, I can't give you too much of an answer on that on YouTube out to the world. But the answer, without telling you the question, is that it tends to go up about 80% of the time at that moment. Someone's asked for some dollar yen analysis, and we will do that while we wait for Ainslie to come back in. Mike, can you let me know when Ainslie comes back in? So let's have a look at dollar yen. Now, I thought I'd done a bit of dollar yen. Look, it's interesting times, and I guess, let's have a bit of a look at this. This is where trading's fun, isn't it? This is where trading is fun for me. So here's one of the things, right? I recently had the top of my range, the bottom of my range, sorry, right where price is right now. And when that level popped, I actually just brought my range down and said, okay, well, I'm going to just consider this to be a continuation of the range right now. And I need to be convinced that it's broken. And look, some of you will know that Julian has put a short in on the broadcast group for his broadcast group. I'm pretty sure it's a short. Someone will be able to confirm that for me. He's going to put a trade on it. And he's just an absolute expert at dollar yen. He just must be particularly, the things that I see Julian make a lot of money on are dollar yen and gold. He seems to be particularly good at the two of them. And look, one of the things that he'll be aware of here is that he'll have a short underneath, looking to go underneath this. And what he'll understand is that his risk on it, that's probably his stop loss. This could well be, actually, it's not his stop loss. It's another trade with the other guys. This is an account where different traders copy some stuff onto this for me. But what Julian will understand is if we get below this bar here, right? If we get below this bar here, then really the next recent support is probably down around here. And, there's a little bit of space there. If you're looking at, I can't remember his levels exactly. I'll have a look in a minute. But if you're looking at a 30, 40 point stop loss, you got 1.5 to 1 down here before you hit anything that's of real significance to you. Recently, there's probably a bit more, but a bit further back.
I'm back. Sorry about that.
That's okay, Angie. But really, there's not, and really, this is quite a nice gap to trade into. And look, the entries are probably a little bit on the aggressive side, I'd have thought, but the reward to risk is pretty good, and the space on it. Let's look at that again. If we get in here, we've got down here for TP1 and we've got down here for TP2. And we are looking at some pretty big moves. And look, if we have a look at weekly charts, we'll see a bit more come in. But there's not much in these areas to hold us once we get through. There's some quite big moves available to us down here. So I can see why we're having a look at this. And I think it's partly that sort of reward to risk type trade. And you guys who know who know the way that I trade, and many of you guys will see this, will know that for me personally, if this finishes like this tomorrow morning, I'm going to consider that potentially an inside bar reversal. But even if I do, I'll just be looking for a move to the top of the bar. More maybe, but that's really what I want from that move. So I'll put that level. I'll put that level back on. This is the level that I think we're just trying to break. And if we get through that level, then I think we'll be away. So dollar yen for mine. It's one of these things you can go down to 4-hourly charts on this kind of stuff. And 4-hourly charts, you've got a bounce here, and you could get into that bounce and look to trade it up to here. What you're really looking for mine is a close underneath here on a 4-hour bar, and you can start and get short. And how you trade this stuff is all about the plan that you have and the kind of trader you are. Some people are just going to be range traders and are looking for this bounce. Some people are trend traders, and really what they need to do is see this on a 4-hourly chart, break through, pull back up, put in another lower high, and then they'll trade it down here looking for lower low. Everyone's going to do this slightly differently depending on the individual plan that they've got. Angie, are you ready to talk trade plan with us?
I am, providing they've got a plan. Because this is where sometimes
trade plans.
Yeah. Okay, we can share a screen, hey?
you need some help? You're under control?
No, tell me what I'm doing. Stop tips of sharing. I need to, I want to pull this up. Are we looking at anything that looks remotely like a PowerPoint?
No, we're looking at what looks like a blank screen.
Oh, that's not helpful. Talk me through it, Paul.
You should be able to click on share screen and then click on the document you want to share.
Yeah, I went to
It'll bring
that.
it up.
I did. Share
Quite
screen.
often with Zoom, you've got to click on share screen, and it'll bring up the box, and from there you've got to pick the most recent version of the thing you've got open. So if you want a PowerPoint, sometimes that PowerPoint's shown open 2 or 3 or 4 different places, and you need to pick the one that is most recent. There you go.
Oh, we're good. Excellent.
Yep.
Thanks for that. I didn't have that before, so I do apologize. But one of the things that we find if we don't have a plan in place is we end up having a bit of a losing streak. I don't know. Have you ever had a losing streak, Paul?
Ainsley, every trader's had a losing streak. It's just part of the game. And look, there's 2 types of traders for mine. There's profitable traders and those that quit in the middle of their losing streak.
Yeah.
You know, you either battle through it and you find a way to money, or you quit. And a lot of people quit at the bottom. It's tough place to get out, but you know, everyone's had a losing streak at some stage, right?
Absolutely. And I know we talk about it, and I've spoken about having a plan in place and all the rest of it. What I'm trying to emphasize tonight is what are the consequences of not actually having a plan in place before you start trading? Why it's so easy for us to get ourselves into this pickle, and not knowing what we're doing. And as you said, most people give up when they've blown up an account or 2. They don't know what they're doing. They haven't got anything they haven't got a business plan. We'll call it a business plan. In my previous life, I ran a real estate office, and I did a lot of commercial and retail leasing. And there were a lot of people came to me and they said they wanted to rent such and such space because they wanted, they liked having a cup of coffee at home. They wanted to run a coffee shop, but had no idea how to put a business plan together, how they're going to run it, what they were going to do, what they were going to serve, the hours of operation, you know, and they just had no idea. And there were a couple of people who, when you say, well, what's your business plan? I wanted to see what they're up to, would turn around and say to me, what's a business plan? Which is never a good start. But they're the ones that would have been in a losing streak, would have lost the bond, would have lost, you know, quite a substantial amount of money. And trading is no different. I know we focus on a strategy and you enter here and your stop loss is there and you take profit there. And it sounds like it's just a bit like opening an account and it being an automatic teller machine. You know, the ATM's just going to give you money, spit money at you. But it's not like that at all. And to let's just get a handle on, we've all had a losing streak, and I've had some doozies, I know, over the years. And I guess you can put it down to a lot of, you just put it down to experience, expensive experience, by the way. But that's what happens. And we will, you know, so what do? You're in a losing streak. What do? You hear about, all of us have had them. Oh, yeah, we put it down. But what do you do when you're in the middle of it? So let's just go back a couple of steps before we get to that point. But one of the first things that I used to do, I'll admit, hang on, I need to go back. Why isn't this is not playing nicely? Sorry. One of the normal reactions is to cry, throw up, run away. I can remember having I was just starting to trade a very large account. It was just over $1 million, and I had a couple of losing trades in a row, and I looked at it and I wasn't sure whether, well, the top three, I think I did really well. But I lost, in effect, the same amount as a car. I could have bought a car with what I'd lost, and it was just a shocking experience. But one of the things I did do is just, I couldn't go back into my study, into my office where I was working. I could not physically get myself back in the room. So it was really, really hard. The next other normal reactions are to revenge trade. People sit there and they're just like, they have a couple of losses and they're just like, right, I'm going to get it back. Don't do that. And don't do the next one either, which is to throw a computer out the window or throw something around the room. Well, I remember a story about you throwing a computer out the window.
It's not a story, Ainsley. That was not my plan for that day, let me tell you. But these things are all part of the learning. It's the stuff we can pass on to others, isn't it?
It is. My kids used to, if I'd had a few losses in a row and I was a bit grumpy and a bit cranky, they'd find another part of the house to go and play in. But then there's this whole disbelief and shock that sets in, and these are normal reactions. You're emotional about it. You just cannot believe what you've done. You're just like, you would never have spent that kind of money or lost that kind of money in such a short period of time. And it's actually quite, it can be quite a shock to the system. So the interesting question with, okay, trading is a very technical thing. Like I said, we give you lots and lots of strategies, and we say go in here, stop losses there, and you take profit here, here, and here. But why do you react like that? They're very emotional. They're very strong emotions, and you've really got to just go back to the question of is why it happens. And there's three main reasons. And one is the trading is 80% psychological and emotional versus 20% technical. And when we get our head around the fact that whilst we teach you the strategies, getting a handle on who you are as a trader and your trader mentality as far as resilience and understanding and keeping your emotions in check is really, really important. You will learn and you will toughen up, I guess is one way of looking at it. But the thing that we don't want you to do is to give up. So many people give up, and so many times, Paul and I have been in the trading and teaching FX industry for a long time, and I would say probably 8 out of 10 people that you meet are going to tell you that don't do currency trading. It's a scam. Nobody makes any money with that. Everybody loses. It's just a scam. They're all going to take your money off you, etc., etc. And it's just, yes, there are some people who can't trade trying to teach people, but let me tell you, overall, if you can get a handle on your technique, but on your emotions and your risk control, you'll do okay. But this is all part and parcel of having a good plan in place. The second thing is the market dynamics. By the way, the market's never wrong. Don't ever say the market was wrong. The market moved the wrong way. The market moves the way it wants to move, when it wants to move, in the way it's going to move. And there's nothing you can do. You can have your trading strategy and your trading setup, and you've checked it all off and it looks ideal. But you can have, and as Paul and I've actually been through all of this with our trading, you can have a tsunami, you can have a nuclear reactor be hit by an earthquake. You can have one governor from one country peg their currency to another and just with as little warning, unpeg it. All these kind of things can radically move the market in whatever way. We had yesterday, we were talking, Orlando and I were talking last night regarding Boris Johnson being able to talk to the EU with the missing the deadline today, and all the pound did was just take off in it was in about a 2-minute session. It just went straight up. So other than that, the pound had been tracking down. These things all change. So you have to be mentally prepared that the market is going to change despite what your last setup is looking at. The third reason you're going to get yourself into a bit of a pickle is because you don't have a plan in place. You don't know what you're doing. You might be just following some great YouTube trading tips. Somebody else has suggested you go in here, get out there. It's a sure bet. It's a sure win. It's guaranteed to win. That's not the way to trade. And the only way you're going to develop as a trader is you have your own trading plan, your own risk management plan, your own strategy checklist in place. And if they're not being done, you're not following them, they're lost, or they're sitting in the top drawer, then you will find yourself quite easily and quite quickly on the end of the losing streak. So what to do next? Okay. Initially, if you're in the middle of a losing streak, let's be really practical here. Close the computer and walk away. Call someone. If you've got a coach, if you're on the mentorship program, call somebody. Have a trading buddy. I know Paul speaks about this often on a Sunday night, and probably on many occasions I've heard Paul refer to getting into a small group of one or two who understand who you are and what you trade and how you trade and how to help you get through these kind of things. A buddy system is not just for sharing trade ideas. It's to actually have somebody who can help you out on this. I have a couple of people I can call. I can speak to Julian. Julian and I've been trading together, or he taught me how to trade. He was my coach going back a decade, and every now and again we'll chat, or we'll talk a couple of times a week, or both of us have been moving house, so it's been by text. But the only other person I will speak to about my trading plan is Paul, or just get a couple of people who know how you trade together and get into that habit. They're going to help you through each other. You're going to help each other as well. The next thing I can absolutely recommend, once you've walked away, go and have a cup of tea, whatever your cup of tea, and I say it in inverted commas because it might be a little bit stronger than tea or caffeine or whatever, but relax and breathe, because you just need to get some perspective. And while you're emotional and you're upset, you're not going to get that. So stop trading, walk away, talk to somebody, especially the coach, especially if you're doing something that you're really small and it's really, really irritating when you look back and you go, I forgot that really small thing, which really makes a difference to the way you trade. I only have a few things that I look at, and one of the things in the last couple of weeks, I've been trying to trend trade in a range, and I have been missing one of my major indicators that I look at. And I just looked at it earlier today and just went, why was I doing that? That's just ridiculous. So yeah, I've had to have a couple of days where I've just pulled back and stop. And I can tell you that the topic is very fresh because it's very close to my heart at the moment. But don't ever go back to a computer until your mind is clear and your emotions in check, that you're calm. Not so calm from your strong cup of tea either, by the way. Give it a couple of days and look at the market with fresh eyes. Don't jump straight back in again. Watch it for a little while. Just sit back and absorb what's happening. Even just, maybe I should go in here, but don't pull the trigger. And whatever you do, don't go with the mindset of, I'm going to get that back. The revenge trade mentality, I can tell you, it does not work. It just makes that big hole in your account a lot bigger. It's not going to help anybody. So they are your initial tips, and what to try and avoid to do, and what to do if that happens. Market's going to move around, and for me, market, the gold's been going sideways. So whilst I've had a lot of bits and pieces going on in the background with my life and moving house and 2 kids on school holidays, they went back to school on Tuesday. It was very good. It was very good, yes. And actually get things done during the day, which is even better. So what we want to do is we want to get you back on track. Okay, so sit back down and clarify what is your why. Why are you doing this? Okay, so once you clarify the purpose for doing something, the way to do it becomes clear. The queen of daytime television that is being quoted there, Oprah Winfrey, but it's so true. If you have some clarity around what you're doing, you really do find a way of how to do it. So sitting back down at your desk without the computer going and you jumping into your trades, just have a little think about what you're doing and why you're doing it. I've given you my own personal trading goal and objective, which is to be financially independent. That's why I'm trading. I actually really enjoy it, by the way. I don't do it because it's something to, you know, keep me out of an office job, but I actually really, really enjoy my trading. If you don't know why you're trading, then it really challenge you to question what you're doing. Because if you don't, you won't have the passion to further understand what it is you're doing. One of the 2 top things for me is discipline and consistency. So getting you back on track is you're going to have to look at a whole range of things. And if you're just handling your trading in a very ad hoc manner, it's not going to, it's not a really good basis to be consistent. It's not your turnkey operation. It's not, as I call it, the McDonald's way of looking at things. McDonald's can have a hamburger, which is very basic, but that Big Mac is consistently made around the globe in every country, just about. It's consistent. The way it's made, how it's made, the ingredients are all consistent. It's just the way it is, and it works. That's how they've had this success, and that's the kind of thing that you want to do. The same. I'm not saying to go out and eat junk food, by the way, but I'm just saying for the consistency of their operation, they have a very simple plan and they stick to it, and it works for them. You want to have these essentials in your toolbox. Apart from a good strategy, you really need to have a handle on what your trading plan is. And I mean, no plan, no trade. You shouldn't be actually opening an account with money in it if you do not know how you're going to use that capital. Because at the end of the day, you're a trader, and if you're trading money, your main objective is capital preservation. If you can preserve the capital and manage the risk, the profit will come, which leads me to the risk management plan. Now, a lot of people think that risk is just merely taking a loss, what you're going to lose, that's your risk. It's not. There are so many elements of trading risk, and I'll go through a few of those later, because I don't think people realise just how built-in risk is, and being able to control the risk, how important that is to your trading. Strategy rules. If you don't know exactly what your rules of your strategy are, then stop trading. Make sure you know exactly what you're doing. I mean, you wouldn't drive a car if you didn't know actually how to, or especially a manual car, if you didn't know how to change gears. Simple things like that, but just make sure you know what the rules are of what you're doing. Have a strategy checklist, and don't leave it in the top drawer, and don't overlook it, and don't wing it, and please don't do what I've done like for the last couple of days, which is ignore one of my indicators because it didn't suit what I was doing. And that is one of the reasons I have had a couple of losses, especially on gold, because it's chopping around, and I shouldn't have been in it because I'm a trend trader. And as we've said, it's just been a really interesting time. It's interesting because I've taken trades that I shouldn't have gone in the first place, but because it's ranging, it's going nowhere. It's flat as moving averages on my daily chart are flat as a tack, and I don't, my ADX, which is also another indicator that I look at, is under 25. And these are the kind of things that are just like, I didn't even look at the chart properly. I mean, I deserve to have a loss because I didn't do my analysis properly and I didn't check off before I went in. Yes, I do have a checklist, and I'm normally very, very good with my checklist and my trading plan and my trading strategies. Yeah, we all have lapses, and this is also, it's in my trading plan, is not to trade when I'm tired. And I'm, after moving house, like I said, and having my two girls home from school, I'm actually pretty pooped at the moment, to be quite honest. But yeah, it happens to the best of us, and life gets in the way sometimes. But it's recognizing it and being able to compartmentalize that so it doesn't actually impact you and your bottom line. Trading journal. Not just what you record. If your trading journal, you should be writing down as you put the trades on. You then should be having your trade management and watching your trade management as well. What are you going to do when it gets to this level? Is this where you're going to take profit, or are you going to just bank part of that and let the rest of that trade run? You need to know what you're going to do and when you're going to do it, and to have it written down in a trading journal as you go every day, and have your prompters for what news is coming out, instead of having it all flash up at you all over the place. If it's in one place in front of you on the desk, it's a lot easier. At the end of the week, you also need to do your review of trades and analysis so that you know where you've gone wrong and why you've gone wrong. Really important. You don't want to repeat the same mistakes, because that's the definition of insanity, is doing the same thing over and over again and expecting as a different outcome. So these are your basics, and if you can start with that to get yourself back on track, you're going to be in a lot better state, that's for sure. I know I pull it up every time I talk about the trading plan, but this is a good trading plan to get you going. I'm not asking you to write 20 pages or anything like that, but these are really relevant questions you should be asking yourself. You know, what kind of trader are you? Are you a trend trader? Are you a range trader? Now, I shouldn't be trading gold at the moment. It's ranging. And Jeff and I have often spoken about the fact that if Jeff was trading gold at the moment, he would be doing really, really well. He knows when to get in, he knows when to get out. And that's just where I'm getting cut. And it's amazing how different strategies will appeal to different people, and finding a groove is really important. Know when you trade. Do you just trade on a daily chart? Do you trade a 4-hourly chart? One of the biggest things I found was that really helped me in my trading was finding a time frame that suited me. I thought, and we all are attracted to the flashing lights of the 5-minute chart or the hourly chart, because it bounces around and it looks really pretty and it's very attractive. It took me a while to find out that to trade less is to trade. You become more select. I became more selective with my trade. Straight up, it's the trade setups that I was doing. And yeah, I find it now very hard, especially with something like gold that bounces around a lot. I find it really hard to look at an hourly chart, or I can't even look at a 5-minute chart on gold because it flicks around so much. But it's one of those things. You just need to do a bit of research and a bit of analysis to find out what suits you as a trader. And until you understand these kind of things, you're not going to actually be able to develop a trading strategy that you call your own, or that you really like a particular setup and it resonates with you, and you see it and you recognize that, and you're going to trade it with a lot of consistency. So it's really important to get an idea of how you are, who you are as a trader. There's so many things that come into that. Is like, do you just like a particular pattern? Do you like just on the market opening of the London, of the New York open, etc.? So you need to go through all of those things, try them, see how they go. Financial instruments. There is very much a look. You can go across so many things to trade. I tend to stick to the major currency pairs, and then probably, you know, obviously my gold and oil I trade, but I don't try and trade everything that I see. That comes a lot down to my risk plan that I've got in place, because I don't want to have so much. I'm not going to see that trade and go, yes, I'll have 1% on that and 1% on that, 1% on that. I'd prefer to understand and get to know some of the currency pairs that I like and how they move, and just stick to that and stick to the knitting and get better at being a specialist in certain areas. I'm not trying to be, I'm not trying to spread myself too thin, I guess is what I'm trying to say there. The only commodities I trade are obviously gold and oil, but I don't do shares. I don't do bonds. I don't do futures. I keep an eye on what's happening in those markets, because all the financial markets are interrelated, but I don't try and trade everything. I don't want to be, what is the term? Oh, it's gone straight out of my head. Anyway, also understand your capital risk per trade. Paul's probably really good at telling some stories, and every time we have an event, he can tell you how many people in the room collectively have lost hundreds of thousands of dollars. I think we've had a couple of events that have just blown us away with.
I think there was trading with us, not trading with us, trading before they got to us, right?
Before they got, yeah. Oh, when we have an event, and it's just you stand there slack-jawed, and they tell you, don't they, Paul?
People tell us.
I think we've had a couple of millions.
Yeah, we've had a guy who lost over $1 million, and you know, we've had a lot that we've met that have lost over 100,000. It's heartbreaking listening to it, Ainslie, and you know, and you said something earlier. It's so important like that. I think, you know, we talk about this quite a lot of different times, that trading's simple, not easy. And when things aren't going right, close the computer, walk away, and go and have a cup of coffee, whatever that is for you, right? Water, orange juice, bourbon, doesn't matter. But get away and don't go back, because those that go back are open to that kind of stuff. And look, you watch some guys, I don't want to distract you on risk, but you watch some guys get in trouble and take big risk and get out of it.
Yes.
And when they do it, you know that one day they won't get out of it. That rescue trade won't work, and boom. I don't need that yet, we'll let you know when we need that. Yes, that'll be it. Ainsley, watching some of that stuff is heartbreaking. I've been enjoying your session so far, Ainsley. Some really good stuff in here, and I hope if you're at home watching this, I know we've got a few on YouTube, we've got a few in the room, we've got more on Facebook. Look, I'd really encourage you to take some notes on the stuff. I know it's on YouTube. You can go back and watch it again in the future. It's one of the reasons we do this stuff live on YouTube, is so we can have you guys go back and watch if you want recordings of this kind of stuff. But these are the things when you can get your head around them. Trading is simple. It's not easy. You do this kind of stuff and it makes a huge difference. Back to you, Ainslie. Anyway, I don't mean to distract.
No, that's all right. No, thanks for that, because it is, like I said, it's heartbreaking, and it can be avoided. We're sitting here saying this is how you avoid it. Well, some people are going to lose money regardless because of whatever reason, but you know, risk. How much capital? We're up to risk. How do you trade? How much are you going to risk per trade? And it's not throwing it all on red. We're not gambling here. We're making a decision based on the highest probable situation in front of us at the time, and we're going to risk only 1%. Or if your risk appetite is less, risk 0.5%. There is no right or wrong here. What you have to do is be comfortable with it, so you're consistent with it, so that you can actually get into the room in front of your computer and put a trade on. And as I said, having the mental resilience and toughness that comes with a lot of experience and pain is all the stuff that we talk about, that until you're actually faced with it, you have no idea. And a lot of people, when they are in the middle of a really big losing streak or in having a trade go against them in a huge way, they're like, you know, bunnies in the headlights or deer in the headlight. They just stop, they freeze, and the account just disappears. As Paul said, we've had events and we've met people before they've come to us on our mentorship programs, lose millions, lose hundreds of thousands. And I wish, you know, we're not making that stuff up, because it's just heartbreaking to see. Know what your position is, your drawdown position is, before trading suspended. So what I mean by that is, have a percentage that you are able to lose. Nobody likes to do it, but we have to be realistic with what we're doing. We're doing an analysis, cost-benefit analysis. How much can you lose before you shut the computer down and walk away and just leave the computer alone? Know what it is and don't go past it. Don't say, okay, I'll be comfortable with losing 10% of my account, and you get to 15% and then you keep trading. And then next thing you know, you've blown 25% of your account because you didn't shut the computer down. You kept trading. You kept doubling up or doubling down on the situation and making it worse. I bet you, without a doubt, if you're in that situation or you've been in that situation, there's a lot of revenge trading happening between 15% and 25%, because you're going to get it back, right? No, it doesn't work like that, because there's no logic to the rationale of your trading anymore. It's all emotional, and the more emotional you get, the less disciplined you are, the less clarity you have about what you're doing, and you cannot see the forest for the trees. And that chart is something that you cannot concentrate on. You just want your money back, and it's an emotional trade. Also, just have a look around and check your trading platforms and your charting software. Look at your brokerage, you look at your account size. Is your account size big enough for what the trades you want to do? If it's not, either wait until you've got a little bit more money that you can put towards it, or take less trades. It's a really simple solution. Do your research and analysis. And I put that in there because, and make sure you've got time to do analysis. Paul runs Trader Talk Radio every Sunday night. We're going through the markets when the markets are closed. And for me, a Sunday evening is the best time, has always been the best time for me to do my analysis for the week coming up, because it's easier to do your market analysis when the market is not moving and things are not flashing in your face than during the week when you're on the fly and the market's moving. The market will do what it's going to do, for sure. But if you have a general idea of what's coming up for the week and how you might react to that, or what's still flat, or if it gets to a certain level, you've got some prompts that you can put in your journal to say, is it at this level? Has it gone to that level? Is it still going flat? We leave it alone and move to the next chart. Those are the kind of things that you want to have your analysis done and your research done before the market opens on a Monday morning. It's all very simple. The other thing that a lot of people overlook, and I know I've talked about a risk management plan, a trading plan, and very quickly touched on, is risk. We overlook risk. Like I said, we bring risk down to how much are we going to lose on this trade? And it's not just that as well. You need to learn how to assess, contain, and manage your risk. Paul Tudor Jones has always said that risk, 90% of any great trader is all about risk control. So you have your risk appetite. Does anybody know what their risk appetite is? Are you conservative, or are you aggressive, or are you moderate, whatever? And knowing what you are will, as I said before, you might be happy with 1% losses. If you're risk averse, 0.5%. If you're quite aggressive, you might be able to cope with a 2% loss, but also have a very strict deadline with your drawdown and know when to get out and get away from the computer. Risk, your capital, leverage, your portfolio. What are you going to trade? Your risk reward ratio. Some people are happy with a 2-to-1. I know we say it around the wrong way, but risk reward, the reward to risk is if we're happy with 2-to-1. Some people won't even look at a trade unless it's if they feel it's got to be a really big winner and everything's lined up. So they'll be looking for less trades, but they're looking for a better setup, for a bigger move. The risk of news, liquidity. We've talked about this. We've talked about news and how things like earthquakes, tsunamis, Reserve Bank governors, presidents even making tweets have really impacted how quickly the market can do a 180-degree turn and keep going in the opposite direction to what you sort of set up. But that's what we have these things called stop losses. Stop losses are really good, but really important for protecting you all around. Here's a scale of risk appetite. If you've never seen this before and you don't know what your risk appetite is, you can go online and do a risk assessment. And I know it sounds all very technical and but you want to develop as a trader, and we're here to try and help you develop to being a better trader. And that starts with understanding yourself, who you are as a trader, and how you're going to handle this. I had a student many years ago, and she was married to the chief financial officer of a listed company. They had no children. She had 2 dogs. So they were very comfortably off financially. Every time I met with her, she'd only ever done trading on a demo account. And I kept saying to her, come on, I think it's time we're ready to go to a live account. Her avoidance of risk, she was so risk averse, she couldn't actually handle losing $30 on a reasonably sized account. She wanted to guarantee that every trade she was going to do would work out, and she needed the certainty, and she avoided the risk. In the end, she ended up just she was better off knitting coats for her dog and walking other people's. She had a dog walking business, and she was happy with that. She loved her dogs, but trading wasn't for her, and that's not a problem. But we finally worked out she just couldn't do it. She had an issue with risk. On the other side, if you're so high with your risk appetite, have a really strict risk management regimen firmly in place, because you've got a greater possibility of diminishing your account size in a very relatively brief period if you do not. And that's aside from getting yourself into a pickle because you don't know what you're doing and you're on a massive losing streak. This is somebody who has high risk appetite, and they're the ones that you see down at the casino that just put everything on red and hope for the best. We're looking for somebody a little bit more in the moderate area, and we can work on those kind of things if you're either end of the spectrum. But moderate is good. You're going to need to be open and willing to understand that you are going to lose something at some stage, regardless of how well you do your strategy checks before you go in. And once you understand that not every trade that you go into is a guaranteed outcome. it has an outcome, but it might a guaranteed winner is what I'm saying. This is me trading with a plan. This is a trade I did in August, and it was gold, and I scaled into the position. I had a very clear plan, and I spoke to Paul throughout the trade that I did, because I'd held it for a little while. When did I go in? Oh, excuse me. So some of those positions I'd taken from about the beginning of, I'd taken from May and had held them right through to August, where I closed it. Is it August? Yes. August. Sorry, June. Middle of June, not May. That was another trade I did. But having a clear plan of what I was going to do and how I was going to scale it in and where I took the profit enabled me to do a trade of that size. There are a couple of times, and I know Paul and I chatted about it, but I said, I've got a plan, I'm just going to stick to it. And he really encouraged me. He said, that's good, you've got a plan. And it was just before gold hit 2000. And I closed the trade, I think it was just short of that. I sold it at night, as you can see here. I got slipped, but it was moving around, as you can imagine, coming into 2000. It was moving around quite a lot, but I was really happy with that. Now, if you look at the gold chart, gold popped up over 2000, and Paul said to me, playing devil's advocate, as it was very funny, he said to me, oh, I suppose you wish you'd stayed in. I said, no, I'm good, I'm happy. I stuck to my plan and I got out, and that was probably what you call worth it. So yeah, this is what you can do with a plan. This is just 1 week I did with my plan as well, which was, I had fairly clear idea. I use pivots and moving averages, and obviously I have the MACD, and I've mentioned before the ADX is how I trade. And these are things that I've had to, I guess, I didn't learn. I went through and worked out what I like to look at, what made me feel comfortable, and where I saw a pattern or a setup that I could use over and over again. And that's exactly what I've done here. I saw the setup, I saw what I liked, all the boxes were able to be ticked, and I could go into the trades and get out and make a nice gross profit for the week. So don't worry if have you been down that hole, or if you're in that hole at the moment. Where I'm saying to you, start looking at how you are as a trader, and here's some 10 top qualities that I think, look, once I started focusing on them, they made sense. And on top of the technical side of things and understanding the market a bit more, these really help me. So essential qualities: have patience, be disciplined and consistent. So you've heard me talk about being like McDonald's or being like the Big Mac, but be consistent. Try and get yourself into a trading situation where you know how you're going to work, how you're going to operate, where you're going to trade, how you're going to trade, and it comes across and you do it the same way every time. And be disciplined and be patient. Be patient. You might be great down on a 5-minute chart, but that needs patience as well. You've got to wait for the right setup as well to come along. So have patience. Control your risk. Enough said there. And don't just think the risk is your stop loss amount on the stop loss amount on your trade. It is right across every aspect and every facet of trading. Skill set. Understand what your skill set is. The mechanics of trading is only part of the big picture in trading. It really is. Very simple. You're going to go in, you're either going to go long or you're going to short or you're going to stay out of the market. You've got 3 options. The rest of it is getting your skill set really sharp. And if you haven't got a coach or you don't have a mentor, get one. I don't know. I guess if it wasn't for Julian, and I know it sounds all very cliche, but if it wasn't for Julian, I wouldn't be trading now. Don't know about you, Paul, but I've got to say, if I hadn't had a coach and somebody to give me a bit of direction, I definitely would not be in this position now.
Yeah, I think excuse me. I think we both had reasonable businesses prior to getting into Forex trading, and we just didn't need to do it. We did it, and at the end of the day, Julian was the guy who certainly for me, the day with Julian in London was the day I realized that, I could be better than okay at this, that I could really, really make trading work for me. And, it definitely changed my whole mental approach to it once I realized that. It really made a huge difference to me, I've got to say. That's one of the things I often find a bit confusing in the business. I think people who don't know Julian are overawed by him, and people like you and me who work with him, he's just the nicest guy. I had lunch with him and Yvonne in Wellington on Monday. They were down for a couple of days, and just the most normal, relaxed, cool people to hang out and chat with. And sometimes people have this this sort of, wow, he's different, and he's just, the great thing about Forex traders is they're not different. You don't have a particular skill. You just have an ability to stay calm and make good decisions. And and he has an ability now. He's just looked at the market so long. He just knows what it's going to do, and it astounds me some of the stuff he does still.
Yeah. And he's sort of, and that's the thing. It's just, he's so calm and he's so logical. It really does help. And if you break it down to, and one of the things that's great about Julian is he wants you to learn. He wants you to get it. He wants you, if you're going to put the work in, he couldn't be happier for you with your success. When I told him I did my first gold trade, I was in New Zealand just after that had happened in January, before back in the days when you could fly somewhere. And he couldn't have been happier for me. He was, and it was just really, it was really nice. There was no, well, I showed you how to do it, or it was none of that at all. It was just, I'm so pleased for you. This is amazing. This is great. You've worked hard. And he was just really, really encouraging. So, yeah, it's...
Ainslie, when we were having coffee on Monday, I can't remember what Jordan was doing, but Yvonne was telling us about how in his coaching recently, someone had told him they'd finally got it, they'd worked it out, and how exciting he is by that, And he's normal. I'm not going to say that Jordan doesn't care about the money, because he's a human being and everyone cares a little bit about money, but he doesn't do it for the money, and he does enjoy seeing the successes. And look, we're really lucky to have people, like him and yourself and Ash and Lloyd and Paul, and we are very lucky to have some really good people. Charlene at the top of our organisation, who are just good people. We're going to do Wheel of Names. Yes, we are, Mike. If you can get Wheel of Names ready, we're going to do a giveaway a bit later on, and we're going to give somebody in the Zoom session a chance to win a month of Ainslie's trade calls on gold. Very highly sought after. I know Ainslie's going to open up a couple of spots and then a couple more into her broadcast group as well. But it's a very limited number group. Ainslie, coach, mentor, do the work. As a bit of a summary, when it comes to trade plans, what are some of the things that you think are just stand out important?
Do one, and don't overdo it. Don't overthink it.
Like that, Ainslie. Don't overthink it. Just write down what you want to trade, and trade it for a month, and then review it and work out whether you need to stay with it or change it. And if you need to change it, just always change when the market's closed, right? it's not a trade plan. If you look at the market and go, well, that bar's 17 pips long, so my trade plan is to trade bars that are 17 pips long. That is not a trade plan. Trade plans are done when markets are closed, and they're rules that you follow, right?
That's right. They're your rules. They're your core rules. You know, should I trade when the MACD is below the signal line on the daily? No, I should not. That is called a retracement. I shouldn't be doing that. I'm a trend trader. So those are the kind of things that I know not to do. Although, like I said, I've had a couple of weeks where I've just totally ignored it, and we go through those stages. But you know, I know I've got to get back on the horse and hi ho silver and all that stuff. But recognizing one thing is to write it, don't overthink it, and don't have. I had a guy on one occasion. He had 27 things. He showed me very proudly. He had 27 things he checks off before he puts a trade on. And I just looked at him and said,
breakdown. I couldn't do it. 27 things.
I said, how on earth? You know, so don't overthink it. Just keep it to 7 or 8 things that you're going to do that give you the nice basis. You know, like a Big Mac. They don't have 27 ingredients. And I don't want to talk about how much sugar's in the bun. We're not going there. We're just talking about simple ingredients on a Big Mac, made consistently, and away you go.
It's funny you talk about Big Mac a bit, Ainsley, because I've seen you out a few times. I've never seen you eat a Big Mac.
I've never I've never taken my kids to McDonald's except to use the loo. So no, I'm not. No, but I'm just saying it's the key.
Here's the key difference for me, right? If you have a trading plan and you follow it, at the end of the month, you've got something you can evaluate. If you're just doing random things at the end of the month, all you've got is a set of random results. Where if you've got a plan and you follow that plan, you can say this part worked and this part didn't work. Because if you've just done lots of random things, there's nothing to evaluate. And honestly, if there's nothing to evaluate, you're not going to be better next month, right?
That's the thing. It's not, and with the trading plan, it's not set in stone. It will evolve with you as you evolve as a trader. And what we're trying to do is get people away from, well, not away from it. You've got to start somewhere. But what we want you to do is get off the training wheels and start being your own, be able to ride the bike and then, you know, keep going and graduate. But to just have, as you said, a set of random trades that you don't look at and you don't assess and you don't know what you're doing consistently wrong or incorrectly, or there's something there that's just not working, you'll never know. And you'll give up. You've put a hole in your account. It's been an expensive hobby for the time being. It just won't work.
Yeah, it's one of those things, Ainslie, where it's been an expensive hobby for me when they do that. I really encourage you guys to give some thought to this trade plan thing and about how to do it. Trade plan screenshots, they're the first 2 tools. You know, at the end of the month, you want to go through your trades and you want to go, look, okay, I took 17 trades, I had 9 winners and 8 losers. My nine winners, when I have a look at them, what I noticed was there's a lot of inside bar reversals. That's what I did. I just went, wow, look at these winners. They've all got inside bar reversals. That's weird. Look at these losers. Well, they've got other reversals. And you do find the thing that works for you by trading a certain thing and looking at charts.
If you were going to go buy a red car, how many red cars do you think you'll suddenly see on the road?
You know, Ainslie, guys actually buy cars for different reasons than the color. I don't want to break the rules for you guys.
It's a visual thing. That's all right. You know, I had to have a 6-cylinder.
You see that model of car all over the place, right? You see that color of car all over the place, right? It's you know, and
the brain focuses on it. And this is what I'm saying. If you've got a setup or a consistent plan that you can then follow, you will start seeing it all over the place. It's like when I was pregnant with my first child. Do you know how many pregnant women are running around? Well, they're not running anywhere, but you start to focus on those kind of things. You notice those kind of things. It's just, I know, bad analogy, but you know what I mean. Your brain will start to focus on things because it becomes clearer. and you're not just seeing it, the static dies away.
It just becomes, it's, when I first started trading with Leon in Denmark, one of the things he said to me was, he said that retail traders don't make any money because they're always trading in the dark. And he said this to me about 50,000 times. I used to sit there thinking, well, what is he talking about? And then I started coaching retail traders, and I realized that they didn't have a plan and they didn't have something they were trying to achieve. They were just looking at charts and trying to make random decisions, and they are trading in the dark. They don't know enough. They need to turn the light on and know and work out what they are looking for, and be this plan or whatever else. How they do it is up to them. Now, I've got something else I need to talk about for a couple of seconds here, Ainslie. In a few minutes, we're going to do a prize draw for people that are in the room. If you're in the room, we'll go into the prize draw, and the winner will get 1 month of Ainslie's Trade Calls, her broadcast group for a month. And look, it's a really important time to do that because everybody's heard about the Christmas trade. Ainsllie calls it her school uniform trade, right? So her school fees
No,
trade.
not the school uniform.
School fees.
It's school fees trade.
School fees trade.
Not the uniform.
Your kids, there's not a little amount of money, right? So each year, Ainsllie looks to pay her school fees with this trade, and it's the Christmas gold trade, and we're getting close. So now's the time to get into this broadcast group with Ainslie, get used to what she does as she works up towards. And look, gold will be a bit flat, potentially up to the US election, but middle of December, you want to be in this group and you want to be in an opportunity to follow this trade. And look, I don't know about you guys, but trading between Christmas and New Year and making 100K, I can do that. I can find a few minutes a day to have a look at the charts, even in to do that.
Can you? You sure?
I think I can. So what we're going to do is we're going to do two things. First of all, we're going to do a draw and see who's going to win that. And I will hand those details on to James, and he'll be in touch for the winner and put them into the broadcast group. And the other thing we're going to do is we're going to, after we've done that, we're going to give people a chance to join your broadcast group. We'll put the link up for that. Okay. So you do one. Look, it's really interesting. One of the comments in here before we do this, one of the guys says, blah, 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 my problem. And what I really want to encourage you, sweet, you're supposed to be having a chat with me on Skype. You never reply. Drop me a line, eh? Where was I going? I got distracted by the messages. Oh, yeah, look, one of the things I really encourage you is somebody who has spent my life coaching in sport and various other parts of my life. I did a bit of business coaching. I've done the Forex stuff, and I really love it. But I want to encourage you that when you can write down, this is my problem, then the first thing you need to do is fix that. And then let people like me come along and take you to the next level. But if you're doing stuff that you know is wrong over and over and over again, I can't actually move you far until you fix that yourself. And, this is part of the plan. Understand what your weakness is and plan to fix it and get to the point where you're trading at the best of your ability and then get some help instead of being trading short of the best of your ability and then get some help. Mike, can we have a prize draw, please? One of the lucky winners is going to have a month for free of Ainslie's broadcast group, mainly gold trades, a bit of analysis in there as well. Mike, can you bring it up and get us into this, please? After that, we will share the link with you all for anyone that wants to join Ainslie's broadcast group.
Yes, hold on. I'll just grab the screen.
Here's my.
Okay, hold on. Okay, are we ready?
We are clicking to spin. Here we go. We are ready. Let's see who the lucky winner is. Who wants to win it? If you want to win it, say something in the Zoom like, yep.
Our winner is Janet.
And the winner is Janet. Okay.
I wanted
The winner is Janet. Congratulations, Janet. Janet, are you in the room? You do need to be in the room now to win it. Gosh, James, you were close, weren't you? Can we just check that Janet is still in the room? Janet, if you can just drop us a note so we know you're in the room. If Janet is not in the room, we're going to do another draw. The winner has to be in the room to win the prize. I'm just going down. M.
Yes, Janet is. Oh, hold on. She just left.
Janet just left the room. Well, we're going to do the draw. No, you've got to be in the room to win. You've got to stay. So Janet has left. And we're going to give you guys if you guys want to win it. We're going to do it again. Look, if you want to win this, you've got to be in the room. Janet wasn't in the room. Janet doesn't get to win. What was that? Sorry.
Janet Wong raised hand.
Janet one. Janet Wong. Janet's back. Janet is a winner. Janet, you will get the prize. James will be in touch in the next couple of days to. Oh, look, I'd love to roll it again. Look,
oh, go on, roll it again.
Come on, let's do one more. Let's give them 2 prizes before anyone else was. One more chance to win it. 1 month only, though. It is 1 month only from the day you join. Come on, Mike, give us one more crack at this. I've got to be out of this session in 5 minutes so that Ash and Jeff can get ready. Do make sure you join Ash and Jeff for Learn to Trade Free for the US session. Mike, can we do one more draw, please? Janet is a winner. Let's have one more.
Yes, okay. So are we ready now?
We are ready now. Clickety click. Can I win it? Clickety click. Janet wins it again. or not. Brian said roll it again, and Brian is a winner. Congratulations, Brian. James will be in touch.
Well done, guys.
Brian will be in touch. James will be in touch with you, Brian, and Janet afterwards to get you guys sorted out. Maya will give your details. Well done, Brian. Congratulations. James will be in touch to get you guys into that group, and you can have a month of that. Really, we are on the countdown to Christmas. Pleasure, guys. Thank you very much, guys. You're more than welcome.
Guys.
Thanks for joining. We love to have you guys in the room. It's nice to have you guys on YouTube, but we love guys being in the room for this particular session. Mike, can you post the link for those that want to join Ainslie's group? If they just want to join Ainslie's group, I do encourage you guys. The build up to Christmas is the build up for Ainslie. We are continuing to keep the numbers in that group under control. It's really important when we have traders starting to do broadcast groups that we don't just drop 100 people on them. It gets in their head. So we will add people to this group really slowly over the coming months. And what I'm trying to do, cheers, Fat. So I don't think we answered one of your questions, but thank you. One of the things I'm trying to do is keep the price where it is and keep the numbers reasonably low, so there'll only be so many opportunities for people to get in. While we are doing that, we will build Ainslie's group up to a full-size group over time. But it's not a great thing to just let everybody into a broadcast group. The traders often struggle. We've had a couple of traders in the past when numbers have jumped up that have just, it's taken them a while to settle. Got a few messages coming in, Ainslie, saying thank you very much. And from me, Ainslie, thank you very much. One of the things I really like, sorry, after you.
I just wanted to say thank you. Thanks for listening. I know a lot of people get a bit, oh, here she goes again about trading plans, but there's a reason I built on about it, because having a trading plan in any business, and I do treat my trading as business, it's really important. I just want people to be successful.
Look, I really like it, Ainslie. One of the things I really like, one of the things that's different about us is we have a team. And one of the reasons you have a team is people bring different skills and different passions. And one of the things I'm trying to do on this show is get people to come in and talk about their passion and the thing that makes a real difference for them. I love having you come in and do it. And the thing I like is people can go away, take some notes, and make some great comments. Thanks, Pirish. Very informative and makes some sense. And if you do this, you'll be a better trader, and that's what it's all about. So thanks for joining us. If you watched today, Ainslie, once again, thanks for sharing so fully and openly and honestly. It makes a huge difference. The Vignesh, this is all these sessions are streamed live to YouTube. So the recording will be available on YouTube in about an hour from now. You'll be able to watch that. You'll be able to watch it on YouTube, no trouble at all, this stuff. We're trying to keep copies of this stuff. Just subscribe to the Accents to Wealth channel on YouTube and do that. Now, if I keep talking in a minute, Maya's going to kick me out of here so that Ash and Jeff can get in with no trouble at all. It's really nice to be back. I'm sorry I was away last week. It was a family, late-minute family stuff. There's still some family stuff going on around the recent events in my family. So it took me away on short notice last week. I'm hoping to be here next Thursday. I just take a trip to Auckland. Our guest next week is Trader Ray. He's going to talk about seasonality. He's in with the mentorship students on Sunday night talking seasonality and cotton. And if you're a mentorship student, jump in and get into that. That's straight after the TTR market analysis show, which is 4:15 Sing for market analysis, 6 o'clock for Ray on Sunday night. Make sure you don't miss it through your mentorship. There's a bit of a giveaway in there as well. Ray will be in next Thursday talking seasonality. Ainslie, I'm looking forward to having you back on the show in the future as well. We're going to have you in the multi-speaker event on the 21st of November as well. Thank you very much for your generous giving.
You're welcome.
Have a wonderful time, guys. Ash and Jeff coming up in 11 minutes. Grab a cup of coffee and enjoy the session with them. Congratulations to Janet and Brian. Well done. We'll get prizes out to you. I'll take care of that for us. Thanks, everybody.
Great. Thanks. Bye.
Bye.